Hello, I'm Brian Lucareli, Director of our Private Client Services Group and co-chair of our family office team at Foley and Lardner. And today I'm here with Ethan Lenz, a partner and member of our insurance practice group. And today we're going to discuss unique insurance considerations for high net worth individuals and family offices. So welcome, Ethan.
Thanks, Brian.
Glad you're here. And then before we get started, would you mind sharing a little bit of your professional background with our audience? And then we'll jump right into the questions.
Sure. So I've been with Foley for 25 plus years now, a little bit hard to believe. But my practice while I've been here, I'm formerly the chair of the insurance practice group. My personal practice has largely been focused around providing commercial coverage insurance advice to our corporate clients. And that includes anything from advising our clients on the negotiation of their, for example, directors and officers liability, professional liability insurance policies, helping them assess their insurance needs, and then assisting our M&A attorneys a lot in the area of both looking at due diligence and assessing the insurance held by target companies, negotiating representation and warranty insurance, the whole gamut of sort of commercial insurance coverage.
Great. So clearly we have the right expert on our interview today. So let's jump right in with the first question. So are there special risk and personal line insurance considerations on the high net worth individual side?
I think in a lot of instances there are, and it really starts with sort of doing a risk assessment around some of sort of the unique assets and more complex and diverse asset sets that high net worth individuals might hold. That might be things like having multiple residences, having things such as, high-end collectibles, art collections, luxury vehicles, even, aircraft or, high worth watercraft, yachts, things of that nature. All of those can lead to sort of specialized insurance needs that aren't going to be covered necessarily, or at least adequately covered by more standardized insurance policies that might be readily available in the marketplace. A lot of times with more standardized insurance policies, you'll run into issues, particularly around assets with those policies will have sublimits of coverage and oftentimes, like $1,000, $2,000 sublimits. So that's the tops you're going to get out of those policies for things like collectibles or jewelry. They may not adequately be able to cover things like classic cars. And so there's all these issues that sort of come up that just aren't adequately handled by a standardized insurance policy. And you really want an insurer and an insurance broker. Insurance brokers can be very valuable in this and directing you to more specialized insurance companies that focus on high net worth individuals. We're not making recommendations, obviously, of insurance companies, but there's a couple of obvious players out there in this, in sort of the high net worth individual marketplace. Those include companies like Chubb, who has a special division devoted to high net worth individuals, the AIG Private Client Group. Those type of companies, they specialize in these risks. They understand them, and they can write individualized insurance policies as opposed to sort of off the shelf insurance policies. Another thing to think about is on the liability side of the equation, the policies that cover you if you become the subject of a claim or a lawsuit. And let's face it, high net worth individuals, for better or worse, are often targets of lawsuits. Whether legitimate or not, you become a target. You can become a target. And when you get into that, you'll get some liability limits, like under your homeowner's policy and under your auto policies. But those limits will usually be in the in the $1 million range or so, and those may not be adequate. So you got to look at also adding probably umbrella liability insurance limits. And those are limits that will an umbrella, it's kind of what it sounds like. It's an umbrella that sits over all of your underlying policies. So one policy will sit over your homeowners and your auto policy, and it'll provide additional liability limits of coverage. And one of the questions I often get is, well, really two questions. Well, what's enough in terms of liability limits? And then the second question is, well, am I making myself more of a target by buying additional limits of insurance? Because now there's just more for a plaintiff's lawyer to potentially grab. And I think the answer to those questions are, what's enough? That's a tough one. Unfortunately, for better or worse, you kind of know what's enough when you actually get sued and you know the magnitude of the lawsuit. But I think you're thinking typically in the range of at least $5 million of umbrella liability limits. You're an ultra high net worth individual, maybe you're looking at $10 million or even more. In terms of the question of, well, am I making myself more of a target by, buying those limits of insurance? That's, I suppose the answer is maybe, but, my advice is usually face it. You're already a target. You probably have a significant amount of liquid assets, and if you are found liable or have to pay a judgment or a settlement, doesn't matter what your insurance limits are, you're either going to have the insurance to cover that potentially, or you're going to have your liquid assets, and you're probably better off to be paying at least some level of premiums to have adequate excess umbrella liability limits.
So great points as it relates to high net worth individuals. What about from a family office perspective? What types of insurance should family offices consider?
Yeah, and this can vary a little bit depending on the exact operations and the assets of the family office. I mean, most family offices are probably going to be, similar to any other business, and they're going to have some standard insurance coverages they're going to want to consider. Um, Commercial general liability insurance, if the family office has a physical presence somewhere, and, there may be clients or investors or targets that are coming to that office, that physical location, commercial general liability insurance is going to cover it, sort of what everybody calls premises liability. It's slip and fall coverage. Someone's injured on the property, someone's injured by one of your employees, things of that nature. So you're more than likely going to need some commercial general liability insurance.
Okay.
If the family office has employees, you're going to need workers' comp insurance. And then I guess the final more standardized coverage, maybe some commercial auto coverage if automobiles are owned by the family office or being used in conjunction with the business. There may be a need for some separate commercial auto coverage above, any personal auto policies or anything like that. Then you get into probably some more specialized types of coverages as well. The primary one being management liability or directors and officers liability insurance. The family office is an entity. It's typically has directors and officers or partners or members or whatever the title might be, but it typically has people who are making management related decisions, and they can become targets of lawsuits for their fiduciary liabilities and breaches of their duties to the family office itself. And again, you don't like to think about it, even if the directors and officers are, largely family members. Intra-family disputes happen,
Right.
unfortunately, all the time. And there can be, then the management of the family office can be called into question. You typically want to have that D&O insurance available. And particularly if you also have outside directors or officers, they're almost certainly going to be looking for that coverage because, they may not have, the significant assets to cover and to be able to withstand a lawsuit of the type that typically a D&O related lawsuit is going to be messy, and there's going to be a lot of legal fees if nothing else, and your directors and officers liability insurance is going to pick that up. Couple of other significant areas sometimes are errors and omissions or professional liability insurance. If the family office is providing investment related advice to the family members, there might be a need for separate profession. That's a professional liability exposure, typically excluded from a D&O policy, and you might need a separate professional liability policy to cover that exposure. Um, Last big one, probably, well, maybe not the last big one, but another big one, cyber liability insurance.
Right.
Family offices, and I think you could, do a Google search and you can find pretty quickly that family offices have been the targets of cyber criminals. And one of the reasons for that, well, there's really two reasons probably. One, again, is sort of you have the wealth concentration in the family office, makes it somewhat of an easy target. The other thing is often family offices are, it's a little bit looser run and there may be less sophisticated infrastructure around the technology and protection of personal data and everything else. So it's an easier target sometimes for a cyber criminal on top of having that wealth concentration. Um, Last one to think about, maybe employment practices liability insurance. That's discrimination. It's largely discrimination and harassment type insurance. If the family office has employees, this is the insurance that is going to pick up typically most of the claims that might be brought by a disgruntled employee or someone of that nature.
Great. So great insight. Lastly, let's stay on the family office side. What are some other insurance considerations about portfolio companies or investments that a family office makes? Anything in that space?
Yeah, a couple of things in that space. I mean, number one, it's going to be sort of the standard insurance policies I talked about. When we were talking about the family office a couple minutes ago, it's going to be kind of that general liability, workers' comp, auto liability. You want to make sure that an investment you're considering that the target is adequately insured, that you're not going to have surprises where they have inadequate insurance and it devalues your investment essentially because they're having to pay out of their corporate assets for claims that could otherwise be covered. So you kind of want to do a standard insurance assessment of the standard coverages. Particular things, it kind of depends on what the portfolio company does. If it's a manufacturer, you're going to want to make sure they have product liability insurance coverage. If it's a service provider, they're going to need professional liability insurance for those services that they're providing. So, it a little bit of variability there probably in terms of the exact type of coverage, but those are some of the basic ones that you're going to want. The other one is again D&O insurance. And this is really now you're kind of looking at the D&O insurance from a sort of two-pronged aspect. One is, well, we're making an investment in this company. We're going to be typically an equity holder of the company, and we might end up being a claimant. We might have claims against their management if that
Good
management
point.
mismanages the portfolio company. We want to make sure that they have something to back up their potential liability, and that's typically going to be found through D&O insurance. The other prong is if you have board representation or even board observers after making an investment in the portfolio company, you're going to want to make sure that those board representatives or board observers are adequately protected by the portfolio company's D&O insurance. Again, you might be able to pick some of that up through a separate D&O through the D&O policy of the family office itself, but typically portfolio company coverage would have to be added specifically to the D&O to the family office's D&O policy. Um, Not all insurers will do that, and frankly, you probably don't want to be using your family office D&O insurance limits for something that is done at the portfolio company level. You'd rather have the portfolio company have its own separate D&O insurance.
Well, Ethan, I want to thank you, number one, for your time and your professional insights today. I found it extremely valuable. And I want to thank all of you for watching our presentation. For more information, please visit us at Foley.com under Family Offices. Thank you.
Thanks for having.